Hello everyone, Philip from BlackBull Markets here. Here we have another Whiteboards Wizard video. This one will be taking you through just the different types of traders. We've got 5 types of traders here. I've got the list down here, so I'll just sort of take you through a brief explanation of each, starting off with our day trader or a scalper as well. So these traders usually, what they do is they don't open a trade for very long. They usually have the trade within a day. So this is mainly focused on your day trader. They close a trade before they go to sleep, or before they leave their charts. As compared to a scalper, it's a very similar structure. What they do is they usually within a trade about, I would say maximum about 30 minutes. What they use is mostly as support and resistance areas. So they look for the quick move in the market. They focus very strongly around the market opens and closes. So this could be a US open and a US closed, European opens like your UK open and everything like that, or Asian opens and Asian closes. So that's pretty much the basics of a scalper day trader. Then they use also with that their technical analysis with, like I said, support resistance areas or consolidation zones. Now, moving on to our technical trader or a swing trader, these guys are extremely focused on the technical side of things. So they do keep their trades open for quite a fair bit longer. They can go anywhere between a couple of days, 2 weeks, or in some cases even a month or more. So what they use is mainly is, like I said, the technical. So this can include things like your Elliott wave, which also go nice hand in hand with your Fibonacci retracements or extensions. There are other Fibonacci sort of time frames as well, and they can use other indicators like your RSI, your MACD, to sort of figure out where the volume is in the market. For stock traders, like I said, they also use that volume indicator as well, which does tend to work quite well for them. And then we have our system and EA traders. So these guys, they don't really spend a lot of time trading. Instead, most of the time is spent on researching, working on their EA, which is the expert advisor, or in some cases people do like to call it a robot trader. And what this does, the robot does all the trading for them, or their system does all their trading. So they don't really spend a lot of time on the chart. Once they've set that up, it's pretty much just a free rolling thing. Now, the one thing you need to keep in mind about this is if you were interested in becoming a system or EA trader, you do need to know that the market does change. So you will have to continuously adapt your EA to the market. Although you're not actually pressing the button, going into the market, researching the market, you do still need to adapt your robot or your expert advisor to the market's conditions, as there are more influences coming or being input into the market. So you need to adapt your expert advisor. Now, moving on to our macro trader or news trader, these guys spend a lot of time understanding how the country's economies work. They focus on things like interest rates or any sort of news that can affect the country's major overall economy. So these guys do keep trades for a long time. They tend to be more investing kind of traders. In some cases, you can have traders who trade the shorter term time frame news events like your NFP or your jobs releases from Canada, for example. So they tend to catch those quick moves, but for most of the time, these guys are looking at more investing trades, so keeping trades open for weeks or months on end. Do keep in mind for different charges when you do come into these sort of longer term time frame trades. So, and then the last one we have is the hedge fund trader. Now, this isn't usually just one guy. This tends to be a big team led by one person. So how this works is you have the group of traders who all sort of they trade as a team together, and how that works is the owner or the main person in charge of this hedge fund sort of system, they have extremely strong risk management. And what they do in that case, then, if a trader is the best trader, will get more money allocated to them, and obviously as the traders go down in rank or performance, they'll have less funds in their accounts. The one thing that all these traders have in common are extremely strong risk management. That's what all traders need, is your risk management. So in most cases, you need to make sure that your risk is high. Sorry, your reward is higher than your risk. So, for example, where we have a great macro trader like Paul Tudor Jones, he's got he only wins trades 30% of the time, but he has a 3-to-1 or even sometimes 4-to-1 risk management. So what that means is every time he loses a trade, for example, he loses $1, and when he makes a trade, he makes $4. So obviously that's on a very small scale. He now manages a fund worth about $32 billion. So that is just a sort of an example. Everyone has to have a very strict risk management. Where for day traders, they tend to go for a 50-50 because they are willing to wait for their trade, sort of stalk their entry, and then once they hit it, they close the trade as soon as it hits their target. So a bit more volume on this. As for a technical trader, roughly about the same as your macro trader, usually 3-to-1 risk reward. And then obviously for hedge funds, what they do is they have a different book of trades, so they tend to hedge themselves to protect their other trades. So this is just the basics of the different traders. If you were interested in sort of learning more about these, do please feel free to email us or contact us. You can do that via the live chat button or emailing us at support@blackbullmarkets.com. Hope you enjoyed this video. Stay tuned. Click that subscribe button for many more to come, and trade safe.